would have to open the strait. That would open immediately. So we're going to give this one shot. I'm in no hurry. Ideally, I'd like to see few people killed as opposed to a lot. We can do it either way. I just wonder whether or not they have the good of the people, because some of the things they're doing to me means they don't have the good of the people. There's a lot of anger now in Iran because people are living so badly. There's a lot of foment that we haven't seen before so much, and we'll see what happens.
Deadline diplomacy. The world awaits the president's next move on Iran, but with talks stalling and Iran's economy reaching a breaking point, a new U.S. offensive is on the table. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Lou Bassanese, Brian Brenberg, and with us for the hour, Great Hill Capital Chairman Thomas Hayes. Great to see you. The U.S.-Iran standoff is putting the Middle East on edge. Israel's military remains on high alert as Iran issues a stark new warning to Washington. If fighting resumes, it could trigger a wider war reaching far beyond the region. But despite the financial toll of the president's naval blockade, Iran's demands remain unchanged and unacceptable. The White House is keeping the heat on, framing this as a once-in-a-generation opportunity.
Well, I'm saying 2 or 3 days, maybe Friday, Saturday, Sunday, something, maybe early next week, a limited period of time. Because we can't let them have a nuclear weapon. If they had a nuclear weapon, they would start with Israel, they would blow it up, and they would blow it up fast, but they'd blow it up.
And he has said, the president, time and time again, he will not allow Iran to have a nuclear weapon. Now, the first soundbite that we played from the president as we came into this was before he got on Air Force One earlier today. He went to the Coast Guard Academy graduation in New London, Connecticut. He's speaking there now. He made some comments that actually moved markets, so I want to share them with you. He said that we were in final stages of talks with Iran. And he also said that basically everything in Iran is completely gone. The Navy, everything diminished. And the question would be, would we go in to finish it up? Would they sign a document? Let's see what happens. And you saw stocks spike on this and yields go up as well.
Yeah, yields came in, stocks went up, oil went down. This is what the market's been looking for. And everyone's been worried about rate hikes now at the end of the year in December. This was temporary. President Trump told us as soon as this Iran thing is solved, gas is going to drop like a rock. Guess what else is dropping like a rock? Yields are going to drop like a rock. And guess what? Inflation expectations are going to drop like a rock. And then what hasn't worked for the last 4 or 5 weeks, which is every other stock but tech and semiconductors is going to get bid like crazy, and the dividend pairs are going to get bid, and the defensives are going to get bid, and the cyclicals are going to get bid. So if there's follow through on this, and this is real, and they are in the final stages, or if he takes action over the weekend after the market closed on Friday, as he implied, you're going to see a different regime in the market in coming months than you've seen in the last month. That's for sure.
Okay, so we've got a chart right now of the Dow Industrial is up almost 500 points. Can we cycle through the 10-year and the 30-year, because we've been talking about these yields moving higher, which have dropped on this news. That might mean restored confidence in the United States. We'll put it that way, along with investors buying stocks as well. So the 10-year Treasury is down 8 basis points. Taylor, is that enough for you?
It's enough to get me excited, but we're just reversing the gains that we had yesterday. So yields went up 8, 9, 10 basis points yesterday, so we're just coming back there. So I don't want to say I don't believe it, but I think what concerns me, and Brian's rolling his eyes already. I know.
We're just going to mention the 30-year a few more times today, all right? For this.
Jackie, yesterday we did a big analysis about the reason why yields are rising.
Yes.
If yields are rising because I'm pricing in higher GDP growth on the horizon, frankly, I'm all for it. Stocks track wage growth. That sounds good. My concern this time around is yields aren't even rising on higher inflation expectations. Most of the rise in the last week, the 10-year real rate that's out excluding inflation is up 25 basis points in the last week alone. That's when you start to get concerns about budget deficits, deficit spending, yields are rising for all the wrong reasons. So I don't want to come in and be super Debbie Downer today, but I sort of reiterate the theme about yesterday about how yields are rising to me still for the wrong reason. Yes, we're coming down today, but we're still in that range of 458. I will say overnight, our 30-year yield hit another post-2007 high. The 30-year real yield ex inflation still at the highest since 2008. For shorter maturities, and I know you said the market's looking for a hike, there's no way. The market is now pricing in an 81% odds of a rate hike this year. That doesn't mean that Kevin Warsh is going to do it, but the market is jawboning the Fed and saying, I dare you to cut rates, and if you do, rates are still going to rise anyways. We saw that under Jay Powell. So super I love when equities are up. I love when yields are down. But I think like my long-term trend, I'm still a little bit nervous at this juncture about sort of what the market's trying to signal to us.
Don't you think today's pivot, though, the signal, and I was worried going into tonight because oil was down yesterday and yields were up. It's basically saying, hey, we're worried about inflation. But this today, this reversal, again, I don't want to call it too early like you, but I think this instant market reaction on the president's comments is very instructive that we're willing to give up the worries about term premium and inflation, and we know the economy is going to get back to going.
And that's what I was going to say. Let's assume for the base case of this example that we're going to give right now, the market believes that the fundamentals of the economy are okay, that growth will be in line, and it will all sort of work out to plan, but that this is based on inflation fears that are coming because of higher oil prices. Oil, if there is termination to the conflict, will drop. And therefore, really, there's not anything else in the inflation story right now other than oil. It's the biggest component. And so I'm looking at this and I'm saying, Lou, is that what this market is saying right now, that this is all inflation based?
I do think it is, and here's why. I mean, being an oil guy, I'm looking at the futures curve. It's been really hard to push up the future contracts out there. We were looking about it yesterday. February, March was in the 80s. They're pulling back so much. And what I looked at today, last week's rig count report, right? If we think oil is going to be higher for a lot longer, all the oil producers are going to start raising rigs and starting to produce because it takes them anywhere from 4 to 9 months to get a new well drilled and online. So they need that clarity that oil prices are going to be higher for much longer. And we're not seeing it. We saw 4 new rigs for oil last week. We're at like 413, 420. That's basically maintaining the status quo.
Okay, so Brian, we're going into a holiday weekend, Memorial Day weekend. Gas prices are on the high side, and we're not even at the peak of the summer driving season. Yesterday, I was saying that, as the president heads into the 4th of July, he needs to resolve this as soon as possible, one way or the other. And Vice President J.D. Vance was speaking about it yesterday. Let's just take a quick listen to that.
We have an opportunity here, I think, to reset the relationship that has existed between Iran and the United States for 47 years. That's what the president has asked us to do, and that's what we're going to keep on working at. But it takes two to tango. We are not going to have a deal that allows the Iranians to have a nuclear weapon. So as the president just told me, we're locked and loaded. We don't want to go down that pathway, but the president is willing and able to go down that pathway if we have to.
And Brian, you know my stance on this. Any tentacle of this regime is not just going to voluntarily hand over the nuclear weapons and the uranium that's enriched so far. So I'm looking at this weekend and saying to myself, based on the comments that the president just made at the Coast Guard Academy, are we gearing up for some conflict that might lead to conflict resolution here?
Right. The vice president said you need two to tango. I don't think Iran wants a tango. They don't want to square dance. They don't want to waltz. They don't want to do anything. They don't dance. Okay. So I don't see the deal. I don't know how we're going to get a deal with these guys. We've spent a long time trying to get one. I don't think it's borne any fruit. So I don't know how much longer they want to tango. I think the president is, you can't say 2 or 3 days again and again and not do it and keep your credibility.
Yeah,
so I think,
I'm starting to get annoyed with that. It's not working to keep extending the timeline in this way.
Right, and I understand there's things going on behind the scenes that we don't see. So he's negotiating with them, and we're kind of getting like the second hand of that. And so I'm fine with that. But they don't want to tangle. We can't do that anymore. I was glad to hear him say, Jackie, in that first clip you played, that he's talking about the strait again. I think I have said on this show time and again, that is the secret to the whole thing. You take the strait, they have lost everything. And now time is on your side, and you can talk about the nukes and so forth. But as long as a strait is closed, and they have effectively closed the strait, we don't have the leverage that we need. So But I'm not, I think I'm with you, Tom, in terms of like the reversal of all this. This is the last thing I'll say. I know we talk about yields on the show all the time, and it's great. And I've learned a lot about yields as we've talked about.
And you wake up at 2 a.m.
And I
to
wake
check
up
yields.
now at 1:30 a.m. to check.
you have
'cause
t-shirts
I'm
that say
very-
you have
I have
30-year
t-shirts I wear
treasuries?
to bed at night about yields. But here's my thing, okay? On February 27th, do you know where the 10-year closed on February 27th, the day before this
Were
conflict?
we 4 1/4?
No, man. We're at 396.
Yeah.
We're at 396 the day before this started. So you can talk about like why are yields up, but all I'm saying is we were below 4 and this started, and there's an inflation problem with high oil. I get that, and I see why that spikes yields. But on February 27th, we were not super concerned about structural fiscal problems with
Correct.
the U.S. So I don't know that we are now. I think it's as simple as oil is feeding higher prices and bond traders want a higher premium if that's happening. And I think that can reverse if we get the straight oil.
Strong position here on
globally,
you.
too.
Respect, though, Brian. That is a 60 basis point move in the 10-year yield in February, March, April, May.
Very short
3
time.
months. To me, that feels like I don't care about the level. I care about the rate of change. You can correct me if I'm wrong. It
Look at
feels
the rate of
like-
change of oil. I mean, that's way more than the rate of change of yields. And I 100% agree with Brian on this. I mean, we were going into this war, remember we were talking about the 30-year fixed mortgage below 6% and housing was starting to go again? And then boom, this came in, rates went up. Every single company that has debt on their balance sheet, which is 2/3 of the S&P 500, has traded down throughout this. The only things that have traded up are those things that can perform in a slower growth environment, which this would create if it persisted for a long time, which is tech and which is semiconductors. Watch what happens to cyclicals if we continue to get good news in the next few days. You're going to see these stocks roar, and you'll probably see some of the overheated ones take a little bit of a breather this summer.
And I'll just make a comment, and this is pure speculation, but based on what we've seen in the past, I have noticed that the president likes to launch these attacks on long weekends, on time when the market is closed, so it can't immediately react.
Yes.
It can digest and have it sink in. So I'll be watching this weekend for sure.